Welcome back to Investing Talk Podcast, and we wish you Happy New Year and a good 2026 ahead.
Today we're looking at Alibaba.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. I mean, Alibaba is it's a massive dominant player.
Absolutely. The scale is almost hard to wrap your head around sometimes.
And the numbers from the last fiscal year, they really highlight that. Full year revenue for 2024 hit CNY 996.35 billion.
Which is what, roughly 140 billion US dollars?
Yeah, about $139.70 billion. And that was up about, 5.86% year over year. But what really stood out to me...
The profit jump.
Exactly. The net income surge of over 62%. I mean, that shows just tremendous profit expansion and, operational leverage.
Those are impressive core numbers for sure, but the real story for the market right now seems to be where the growth is, really accelerating.
Right.
We've seen several quarters now where the high-margin cloud intelligence segment is really proving to be the primary engine.
Absolutely. If you look at the recent quarterly filings, the cloud segment delivered 26% year-over-year net sales growth in the June 2025 quarter.
26% is solid, but not exactly earth-shattering for a cloud segment.
Right, but that's the headline number. If you look deeper, the AI-related products within the Cloud Intelligence Group are seeing triple-digit growth.
Triple-digit. Okay, now that's interesting.
And it's for the 9th straight quarter. So this isn't some one-off event. It's a real trend.
And this growth is tied directly to their AI leadership, I assume. I mean, their Quinn AI models are apparently highly competitive with the big US and Chinese alternative.
They are, and they're using this tech to power new initiatives, like that recent high-profile partnership with NBO China.
Right, I saw that.
But that strategic AI pivot, it comes at a cost. And this is crucial for investors to understand.
Okay, here's the other side of the coin.
Exactly. While the gross revenue is up, the company is deploying massive, and I mean massive, capital expenditure to secure this AI dominance. We're talking about $52.44 billion over 3 years.
Whoa, $52 billion.
And as a result, non-GAAP earnings recently fell 71% year over year.
71%, that's a huge hit. That's got to be scaring some people off.
It's a scary headline, for sure, but it reflects that strategic reinvestment. And, they've also doubled marketing spend in growth areas like quick commerce. So it's all impacting near-term profitability.
Okay, so despite this massive focus on AI and cloud, we can't forget the foundation, the thing that's paying for all of this. Sure. E-commerce. What stands out to you about their core business strength?
What's fascinating here is the resilience and the moat. Alibaba maintains this deeply entrenched leadership in China's e-commerce landscape.
And the numbers are still strong there.
Very. Local e-commerce revenue recently grew 16% year over year, which is actually the fastest it's grown since 2021.
And that was bolstered by things like government stimulus and, of course, their Singles' Day event, which delivered double-digit consumer growth on Taobao.
Exactly. It all comes back to their network effects. The ecosystem spans payments, logistics, content-led commerce. It all creates really high switching costs for consumers and defends their market share.
And that NBA China partnership we're hearing about, is that just a tech deal or could it expand into that core business?
Well, the current deal is focused on sports tech, leveraging their cloud and AI infrastructure. But yes, the chatter suggests this could expand into broader e-commerce and digital entertainment.
Which would just make that platform even stickier.
It would materially enhance Alibaba's platform effects by integrating entertainment consumption directly into their commerce ecosystem. And we're also seeing chatter about accelerating international cloud deals, especially in Southeast Asia and the Middle East.
Which would help diversify their revenue. Okay, let's look at the balance sheet. They have the financial muscle to actually pull off this massive AI investment, right?
Oh, absolutely. They maintain a fortress balance sheet with significant cash reserves and very low leverage.
So that financial strength gives them the resilience and, importantly, the ability to self-fund all this growth.
Right. And they've been active with share buybacks, and there's ongoing discussion about dividend payments, which, indicates management is pretty confident.
However, their free cash flow did recently turn negative because of all these high capital expenditures. That sounds like a big short-term pressure point.
It is. That's a key part of the risk profile. And the other major risk, well, it remains the persistent regulatory scrutiny.
We seldom in the room.
Always. Geopolitical tensions, antitrust probes, policy swings in China. It continues to be an overhang, which can pressure sentiment no matter how well they're executing.
Moving to the technical side, though, The stock has shown a pretty robust momentum reversal. It's up nearly 96% year-to-date and over 40% in just the last 3 months. That signals some strong investor confidence in this pivot.
It does.
So where are the technical levels people should be watching?
Okay, so the stock is currently trading in that 152 to $166 range. Its 52-week high is around $192. So for technical traders, there's key support around the $130 to $140 level.
And resistance on the upside.
Near-term resistance is noted right around $170.55. A confirmed breakout above $170 would likely trigger the next leg higher.
And it seems like market sentiment backs that potential upside. I'm seeing consensus price targets raised as high as $194, which implies, what, 20 to 40% upside from here?
That's right. Institutional flows have turned positive, with several cluster buying events noted recently. And while there was a recent analyst downgrade citing those near-term profit risks we talked about, the broader Wall Street consensus is still really constructive.
They see the long-term AI and cloud acceleration.
Exactly. And the stock's beta is only 0.32, which is interesting.
Yeah, that suggests lower volatility compared to the broader market, which feels a little counterintuitive with all the headline risks.
It is a good point. It likely suggests that its financial stability insulates it from daily market noise, but it's not a shield against major geopolitical shockwaves.
Okay, so to wrap up our analysis, what are the clearest triggers for price movement in the next 3 months? What should people be watching for?
There are two major earnings reports that investors will be watching very closely. One is expected very soon, around November 20th, 2025, and then the next Q3 earnings are due in February 2026.
And everyone will be looking for continued cloud growth and updates on that capital spending.
For sure. And on the operational side,
What should we be looking for there?
that NBA China partnership launch. The in-app AI features powered by Quinn are set to roll out in late November or early December. That's an immediate user and advertiser growth
A
driver.
real-world test.
Exactly. We also anticipate announcements about AMAP's global AI navigation partnerships and maybe even confirmation of some government energy subsidies for big tech, which would directly reduce their operational costs.
So if we connect this all to the bigger picture, it really sounds like the near-term risk is mostly about managing expectations around profitability, while that long-term structural tailwind of AI and cloud remains firmly intact.
Precisely. And this raises an important question for you, the listener. Given the trade-off between massive near-term investment hitting profits and the huge long-term upside in AI market dominance, how do you weigh those two factors when considering your investment horizon?
Food for thought as we head into the new year. Don't forget to subscribe to the Investing Talk podcast to keep up with all our latest analysis. We appreciate you tuning in.